Hello and welcome to Simplicity in Stocks. When promoters raise their stake in a company, it reflects their conviction in the business and a willingness to back that belief with personal capital. For investors, such moves can serve as a confidence marker, especially in periods of market uncertainty. Promoters of the three companies covered in this video have increased their ownership during the September 2025 quarter. Please note that this video is for information purposes only. It's not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. Kiri Industries is a large manufacturer and exporter of dyes, dye intermediaries, and basic chemicals. It's one of the largest Indian manufacturers and exporters of its product range. The company leverages backward integration by manufacturing about 60% of the intermediaries required for its color manufacturing domestically. This helps to manage raw material costs and quality. The promoters have increased their stake by 500 basis points, that is 5%, sequentially, and by 1,300 basis points, that is 13%, over the last 1 year. The company's revenue rose 10% year on year to rupees 2 billion in the first quarter of FY26, while profit after tax crashed 89% to 100 million rupees. Due to the challenges in the textile sector, raw material price volatility, low capacity utilization of around 48%, and the recent 50% US tariff on dye imports, the management has tapered down their forecast to rupees 12 to 13 billion in revenue for FY26. That said, the company is optimizing its product mix, rationalizing costs internally, enhancing internal efficiencies, focusing on strengthening value added products, and improving productivity. The company is also diversifying by expanding into copper smelting and the fertilizer sector. This project involves establishing an integrated facility in Amreli, Gujarat, near Pipavav Port. This facility includes 500,000 metric ton per annum copper smelter, a 350,000 metric ton phosphoric acid plant, and a 1,050,000 metric ton nitrogen phosphorus potassium fertilizer plant. Construction has already commenced with a 3-year completion timeline starting October 2025. Refex Industries operates 5 distinct business verticals with a diverse portfolio encompassing ash and coal handling, eco-friendly refrigerant gases, green mobility, wind energy, and power trading. It provides services to more than 40 power projects across 15 states in India. The company's largest client is NTPC, which accounts for about 60% of this business segment. The company expects this business to grow at 20% annually. It's reducing its focus on refrigerant gases due to the limited market size. The promoters have increased their stake by 260 basis points, that is 2.6%, during the June to October 2025 period. Refex operates more than 1,300 vehicles in Bengaluru, Chennai, Hyderabad, and Mumbai. The company aims to expand its fleet to 5,000 by the end of FY27, with profitability expected to begin around the same period. In the wind energy segment, the company is focusing on manufacturing 5.3 megawatt and above wind turbines, aiming for 5 gigawatts annual production capacity within 5 years. It plans to achieve profitability in the wind business this year itself. Jyoti Resins is a manufacturer of synthetic resin adhesives. It manufactures various types of wood adhesives under the brand name Euro 7000. The company's network spans 14 states, 65 distributors, and serves 13,000 retailers and 350,000 carpenters. The management's focus is entirely on the white gum adhesives business, which has an estimated market size of around 75 billion rupees per annum in India. The promoters have increased their stake by 310 basis points, that is 3.1%, sequentially. The management is focused on steady profitable growth in the long term. The goal is a revenue of rupees 5 billion in the next 3 years with a 15 to 20% annualized growth. To achieve this, the company is increasing monthly capacity by 1,500 tons over the next 6 to 12 months, bringing the total capacity to 3,500 tons. The management estimates incremental revenue of rupees 6.5 billion from this new capacity. The company will also set up a new greenfield capacity at an investment of 450 million. Each of these companies is in an investment phase with an aim to scale up capacity, diversify revenue streams, and improve operating leverage. While the near term earnings may be volatile due to execution and demand related risks, the expansions reflect the management's intent to capture a higher market share in the future and also enhance long term profitability. Promoter buying reinforces confidence among investors in the growth visibility. However, it is necessary to carefully analyze these companies' fundamentals, including financial performance, corporate governance practices, and the future growth prospects before considering any investment. Happy investing!